Hello, I'm Dr. K.K. Misra. Welcome to my channel R Classes. Multiple choice questions on working capital management part 4. This is important for those students of MBA and other disciplines UG or PG who have opted this subject or who are to write their final examinations to be held very soon. Now come to the question. Question number 1. Which one of the following actions should a manager take if he or she wants to decrease the operating cycle? Options are A. Decrease the period of time for which credit is granted to customers. B. Decrease the rate at which the average inventory is sold. C. Delay payments due to suppliers to decrease the cash cycle. D. Increase the inventory level while maintaining constant sales. Or E. Purchase all inventory with cash. Correct option is A. Decrease the period of time for which credit is granted to customers. Now question number 2. Which one of the following credit terms is most apt to produce the shortest accounts receivable period? Options are A. Net 10, B. 2/10, net 30, C. Net 45, D. 2/10, net 45, or E. 3/5, net 10. Correct option is E. 3/5, net 10. Question number 3. Baker Industries offers credit terms of 2/20. Net 62, Charlie and Charlie Company has inventory period of 15 days and operating cycle of 45 days. Given this, which of the following statements are correct? First, the credit terms of Baker Industries are too restricted. Second, if Charlie Company forgoes the accounts on its purchases, it will have a negative cash cycle. Third, Baker Industries is financing the accounts receivable of Charlie Company. Fourth, if Charlie Company is delinquent in its payment, Baker Industries should be concerned. Now, combinations of correct options here are A. First and second only, B. Third and fourth only, C. First, third and fourth only, D. Second, third and fourth only, E. First, second, third and fourth. Correct option is B. Third and fourth only. Now, question number 4. All else equal, which one of the following will decrease the cash cycle? Options are A. Increasing the operating cycle, B. Decreasing the accounts receivable turnover rate, C. Decreasing the accounts receivable period, D. Increasing the inventory turnover rate, E. Increasing the credit period granted to a customer. Correct option is D. Increasing the inventory turnover rate. Question number 5. Dash refers to the amount invested in various components of current assets. Options are A. Temporary working capital, B. Net working capital, C. Gross working capital, D. Permanent working capital. Correct option is C. Gross working capital. Now question number 6. Dash is the length of time between the firm's actual cash expenditure and its own cash receipt. Options are A. Net operating cycle, B. Cash conversion cycle, C. Working capital cycle, D. Gross operating cycle. Correct option is A. Net operating cycle. Question number 7. XYZ is an oil-based business company which does not have adequate working capital. It fails to meet its current obligation, which leads to bankruptcy. Identify the type of decision involved to prevent risk of bankruptcy. Options are A. Investment decision, B. Dividend decision, C. Liquidity decision, or D. Finance decision. So it's C. Liquidity decision. Question number 8. In finance, working capital means the same thing as the total assets, fixed assets, current assets, or current assets minus current liabilities. Correct option is D. Current assets minus current liabilities. Question number 9. Which of the following would be consistent with a more aggressive approach to financing working capital? Options are A. Financing short-term needs with short-term funds, B. Financing permanent inventory buildup with long-term debt, C. Financing seasonal needs with short-term funds, D. Financing some long-term needs with short-term funds. Correct option is D. Financing some long-term needs with short-term funds. Now, question number 10. Which asset liability combination would most likely result in the firms having the greatest risk of technology insolvency? Options are A. Increasing current assets while lowering current liabilities. B. Increasing current assets while incurring more current liabilities. C. Reducing current assets, increasing current liabilities and reducing long-term debt. Or D. Replacing short-term debt with equity. Options are Correct option is C. Reducing current assets, increasing current liabilities and reducing long-term debt. Question number 11. Which of the following illustrates the use of hedging approach to financing? Options are A. Short-term assets financed with long-term liabilities. B. Permanent working capital financed with long-term liabilities. C. Short-term assets financed with equity. D. All assets financed with 50% equity, 50% long-term debt mixture. Correct option is B. Permanent working capital financed with long-term liabilities. Question number 12. In deciding the appropriate level of current assets for the firm, management is confronted with options are A. A trade-off between profitability and risk. B. A trade-off between liquidity and marketability. C. A trade-off between equity and debt. D. A trade-off between short-term versus long-term borrowing. Correct option is A. A trade-off between profitability and risk. Question number 13. Permanent working capital. Options are varies with seasonal needs, includes fixed assets, is the amount of current assets required to meet a firm's long-term minimum needs. D. Includes accounts payable. C. Is the amount of current assets required to meet a firm's long-term minimum needs. Question number 14. Net working capital refers to A. Total assets minus fixed assets. B. Current assets minus current liabilities. C. Current assets minus inventories. Or D. Current assets. It's B. Current assets minus current liabilities. Question number 15. The addition of all current assets investment is known as. Options are A. Net working capital. B. Gross working capital. C. Temporary working capital. Or D. All of these. Correct option is B. Gross working capital. Question number 16. When the total current assets exceeds total current liabilities, it refers to. Options are A. Gross working capital. B. Temporary working capital. C. Both A and B. D. Net working capital. Correct option is D. Net working capital. Question number 17. Which of the following would not be financed from working capital? Options are A. Cash flow. B. Accounts receivable. C. Credit sales. D. A new personal computer for the office. Correct option is D. A new personal computer for the office. Question number 18. Which of the following working capital strategies is the most aggressive? Options are A. Making greater use of short-term finance and maximizing net short-term asset. B. Making greater use of long-term finance and minimizing net short-term asset. C. Making greater use of short-term finance and minimizing net short-term asset. D. Making greater use of long-term finance and maximizing net short-term asset. Correct option is C. Making greater use of short-term finance and minimizing net short-term asset. Question number 19. Current ratio of a concern is 1. Its net working capital will be. Options are A. Positive, negative, nil, or none of the above. It's C. Nil. Question number 20. Current ratio is 4:1. Net working capital is rupees 30,000. Find the amount of current assets. A. 10,000. B. 40,000. C. 15,000. D. 25,000. It's B. 40,000. So this was all about this video tutorial. This is the last video tutorial of WCM, Working Capital Management. I hope you have liked it, and if you have liked it, you please do not forget to subscribe and press the bell button and pass it on to others, those who are in need now and in the future. Thank you. Please like, share and subscribe. Thank you very much. Have a nice time.